Hello traders, it's Samurai Trader here. Welcome to session 150. In today's session I've been trading the ES and I've just taken a trade on CL. Now this is Monday the 2nd of March, so we've just had the war in Iran start, so we've got a lot of volatility in the market at the moment. So I'll show you the ES chart, and actually let me just quickly show you this trader just fired off on CL. Now CL, these are all potential entries, by the way, we've had on CL the last hour or so. So I've just taken this one here, and I am using a 4-tick chart. Normally during the Globex session, this is 1 a.m. Central Standard Time, so we're about to have the London market open. Normally you'd be trading a 2-tick chart, but with this extra volatility you'd have to increase your time frame. Likewise with the ES trades I'm about to show you, the same thing applies. That is, I was able to trade the 2-tick, but quite often during the Globex session we can get down to even a 1-tick, which means a smaller stop loss. You can hit your targets faster. Now earlier today the 2-tick ES was near impossible to trade. It was just that fast. However, it had slowed down enough for me to get some trades in. So I'll cover these in great detail. I've got a recording. Now it goes for 40 minutes. I'm not going to play the whole 40 minutes. I'll skip ahead, show you a couple of live trades, and explain to you in great detail exactly what I'm looking for and how I trade these positions. Now, as always traders, there is a risk in trading. Please don't trade with money you can't afford to lose. And as I always say, stay on the simulator until you're consistently profitable. And that's a great thing about virtually all trading platforms today. You can trade on the simulator. Now this is important with this session where I'm talking about trading and thinking and trading in probabilities. You see, anything can happen with the individual trade. It's random. We've got to think and trade in probabilities of 20. And Mark Douglas, the great late trading psychologist, was very big on this, and he would basically say there are 5 fundamental truths. Number one, anything can happen. That is, we could have someone with a fat finger, and sorry, I've just got this happening just here. We could have someone with a fat finger. Sorry, I'm just watching this just here very closely, and I'm just trying to get this. Just want to show you here. I've just decided to short here, so just there I just shorted, so that's now up to 2028, just shorting that. Now this here was called a T3. Now what this is, a T3 is a pattern. It's also what we call a reversion to the mean trade. Now what, and while I'm on this, these sessions are also meant to be very educational. This is called an overlay chart. An overlay chart allows me to see what's happening on a higher time frame. For an example, see that white line there? That's telling me overall I should be considering longs only, and same with that blue line. Very simple, very mechanical in its approach, and this is what we then call, as I mentioned, a T3. So that's great. So it's another 2028. So I'll stay focused on this now because otherwise there is a T10. Sorry, look, I won't trade it. I'll stay focused on this, otherwise we'll go forever. All right, anything can happen of a trade. Someone can start trading with a fat finger, place a trade for 1,000 contracts, and what you had was a perfect setup and just throws it all out. You don't need to know what's happening next in order to make money. The whole thing in the end really is about having an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. For an example, trading with the trend. You've got probably an 80% chance of the trend trade continuing. Now eventually, of course, we're going to have reversals, we're going to hit highs and lows, etc. But the reason I bring this up here is that in today's session I actually had to fire off, as you'll see very soon, 13 trades to hit my target. Only 8 were winners, and I think there were two losses, 3 break-evens. And what's interesting, the 2 losses and 1 or 2 of the break-evens were counter trend trades. Trading with the trend traders is much easier overall, and if you're a brand new trader, I'd be recommending you stick with trend trading only. Don't trade CT trades. Now, very quick advertisement: if you haven't already, you can download my ebook, The Truth About Day Trading. Make sure you subscribe to my channel. Click the icon now so you can be kept up to date with all of my videos. Very quick ad here. Why don't you join me as a member for $297? Everything I show you is included. That is all my indicators. I've got hundreds of hours of videos. No, you don't have to watch them all. There's over 35 PowerPoints, etc., etc. My indicators are free, and you get all of that for $297. And when you join and log in to the members area, you'll be blown away at how comprehensive this is. I'm proud to say I believe this is probably the most comprehensive scalpers and day traders members area there is globally. And if you click on each one of these, you'll find there's dozens of indicators, strategies, spreadsheets, information spreadsheets, PowerPoints on divergence trading, trend trading, etc. Now, if you're a brand new trader, sorry about that, had to cough. If you're a brand new trader, traders, I guide you on the first 1 or 2 strategies to start with. You only start with a couple of trend following strategies, and as you'll see when I get to the charts, how easy these can be to identify. Now, if it's easy, why doesn't everyone make money from trading? Because the easy things are also easy not to do. So in a moment I'll point out my key setups to you, and last of all, I also have a bonus going where I run both a live trading room. I've got just under 300 members, and I've run a coaching session, and there's just under 300 odd members in that as well. So I give you a month free to the coaching room. So it's 8 2-hour live sessions. If you can't make the sessions, you can watch recordings, you can type in, ask questions, and the whole purpose of these 2-hour sessions is to teach you step by step exactly what I'm looking for. We go through the psychology of trading, money management. If you're a brand new trader, we really cover the A to Z of trading. If you're an experienced trader, I'm teaching you in these sessions advanced trading techniques as well. So let's now get into this. Now, first of all, I classify myself more of a scalper. A scalper is I look at it like a sparrow. How's a sparrow feed? Just flies in, flies out, gets a bit, gets out. And you'll see I like to really align this with the concept of Moneyball, the great movie that was produced back in 2019. Just get on base. Rather than going for the home runs, just get on base. Okay, pick up 5 ticks, 10 ticks, 5 ticks, 2 ticks, 1 tick. Okay, get in, get out, get in, get out, because it works. It also means you've got a smaller stop loss. So today was a bit unusual for me for 13 trades, but I'll run through these with you. So basically you can see here, and I'll show you the recording. We'll as I said, we'll look at some live trades as well, how I enter. So we can see over 3 slides here, and it was actually quite choppy and tricky in a couple of these areas. Now the market's taken off, and as you'll see in a few minutes, there's some beautiful trends. However, quite often we don't know we're going to hit chop until we're into trades. Now see that red line there? That's a pivot, and this is a low of day. You can see there we bounced around. I actually had a loss here. I bought into a down trending EMA. It's a much tougher trade, and that one I got stopped immediately, jumped back in. So look, we're going to go through these, but the important thing here is targets. I like to have a goal, a target of how much per day. A lot of traders say, well, look, you just go for what you can get. Well, I believe in POQ, the power of quitting. Get in, get out, get paid. Now see that there, 325. I was up 392, as you're about to see, out of this per contract, and using the power of quitting, I've finished. Now, as you'll see when we get to the charts, there's just been some fantastic trades set up after that. So for the young guns watching this, you might like to get in and keep trading. I'm 66. I just want to get in, get out, get paid. Now, I've already mentioned the movie Money Pit, and in this movie where Brad Pitt stars, it's really about, he takes a baseball, and it's a true story, from really struggling, and as he says consistently, just get on base. Now, there are three ways of really funding, well, there's really two ways of funding your trading career. Number one, you can start with a prop firm now, where you only really need a couple of $100 and you can get going. They're huge now, and we've got dozens of members now that use my strategies for prop trading. The reason being, they're very pattern-based, mechanical, get in, get out, get paid, and lower risk. Now, you can start there if you've got virtually no money. If you've got $600-700, you could start off and targeting $30 a day and just trade the micros, because you can either trade the big contract or the micro. The big contract is $12.50 per tick, or $50 a point. There are 4 ticks per point. Or you can start on the micro, which is only $1.25. Now if you go for $30 a day, okay, which is only 26 ticks a day, within 12 weeks you'll have the potential now of rolling over and trading the big contract. Now you've got an income of $1,500 a week. You may say 11 contract, I'm just going to stay with that, I'm happy as Larry with that. On the other hand, you roll over and start trading the big contract, and if you're going here for 313, I've mentioned 325, just rounding it off there, within 11 weeks you've got the potential there, 12,000 a week income. Your capital's now nearly 60,000. and the way this compound, and by the way, you can download this compound table in the somewhere down below. Okay, you'll go down below the video and you can click on it and download this, and I've got a little training video that goes with it, because we're using the market's money. Where we see we've got this increase, unlike a lot of ridiculous things you see on the internet and on Google, etc., about these massive compounds tables, you only start trading your second contract when you double your money. Then you go to you get another, in this particular case 625, you then go to the next one. Okay, so you're buying more contracts, or adding contracts is really what I should be saying, as you build your account with the market's money. Okay, and so you're only going to be trading 2 contracts, okay, when you got $12,000, $13,000 in your account. You're using the market's money. Now I won't get into some of the other things, like what if you don't believe you can do this? Start off and target only $15 a day. I'm going to show you how to do that. From there, okay, 15 a day, and that within 24 weeks you've now got the $6,000 to roll over. You might then say, you know what, I just want to fire off a couple of trades a day, just 2 trades a day, and look where you are then in 28 weeks. There's your 10 grand a week income, 100,000 under management. This is the true potential if you do it correctly. Ultimately, traders, we are what we call risk managers. Whether you're trading with a prop firm or whether you're using your own capital, we've got to learn to manage our risk. Now all of these levels here, very easy to learn. I teach you how to use pivot levels and the major EMAs, etc. I won't get into those today in this particular video, but let's go to the charts first of all. This is back at 23:51, so just midnight Central Standard Time, so it's a bit over an hour ago now. I finished these trades there. So there were 13 trades. And by the way, when it comes to the capital, your broker will tell you only need $500 to $1,000 for the day trading margin. When you've got great volatility like this wall that's broken out, you'll find your brokers, like on oil, will put the margins way up, okay, because of the volatility in the market. So just be aware of that, traders, that the margins will be up. Now that is why I recommend you have 6,250. If you got a 10 tick stop loss, which is $125 on the ES, what's 50 times that? 6,250 or thereabouts. That's 2%. So 125 is 2%. We never risk any more than 2%. By the way, this is what most traders don't want to hear, and they want to skip ahead and they want to try to cut corners, and that's why less than 10% of traders make it. They want to cut corners. Now I can help you cut the corners with the right strategies, but you've still got to apply the discipline. So if we look at this here and we just then move along since then, and let me just try to move this quite quickly, there's just been some beautiful trend trading since that one, since those setups. And as we get closer to the London Open, which is at 2 a.m. Central Standard Time, we'll get some beautiful swings. Now what it also means is that come New York Open, you're going to have to increase the size of the stop loss that you're trading. So you almost certainly today you'll be trading a 4 tick on the ES, but that's a bit beyond discussing in these sessions. But see all these, see my arrows there? Now it means you can get in on your second candle. Note the cloud. There's a whole lot of tips and ideas here, trader. Tips and ideas. It's all about strategies, sorry, tips and ideas. See these here, these are called pivots, and they become a self-fulfilling prophecy because as professional traders we trade into these each and every day. Now you can even see here the market's really picking up, so it's getting a wee bit fast. We'll see what happens at 2 a.m. but we'll probably find that we'll need to increase to a 3 or 4 tick. Now of course most of my members are in the US, so you're not going to be trading till 5, 6, 7 a.m. Into the London Open. Now see that they're beautiful double top there, by the way. But digressing, let's now quickly look at this recording and a couple of key points. This, by the way, this down the bottom here, this is called a MACD BB, and I actually took that off. I don't normally have that on the entry chart. So what I've done here is I've just shorted this trade here based upon something that's happening on a higher time frame. The whole concept, traders, is that we're looking for retracements and trend continuations back in the direction of a higher time frame. So I teach you, whoops, that's the recording, sorry. Let's see here. I was going to show you the higher time frame, but never mind, we'll go back to this for now. Okay, so I've got a set target. I'll sometimes increase that or decrease that depending what's in front of me. See how you can, there's nothing here in front of me at the moment, and I call that blue skies. If we had have sold here, you've got to get through some of these pivots and other areas. So if I say where this exit is just here to cover down here at that level at 31.50, if that was a pivot, I might even then just look to cover when I hit that pivot or to get out 1 tick beforehand. But let me just move this along so we can see what's happening here. Now here is, by the way, this is a divergence trade. Now divergence trades, as I mentioned, 2 of the losses and I think 1 or 2 of the break-evens today were divergence trades, and I really recommend traders that as a new trader, stay away from divergence trading. Now I've been trading now for 28 years, huge amount of experience, so I know and think and trading probabilities, but a lot of traders, they get wiped out with 2 or 3 losing trades, and if they're say counter trend trades, okay, they start thinking something's wrong, etc. Look, I won't even go down that road right now, so I'm trying to get everything in within 30 minutes. For members watching this actually turned into, as you can see, a T10. So this is a divergence trade. We've got another setup, so you'll notice I've got codes on most of my setups. It just makes it a lot easier to explain what I'm trading. Now we've just rolled over just there, that is Eastern Standard Time, midnight, and so all of your pivots changes every 24 hours, and For a brand new trader, you'll learn what they are, and it ain't rocket science. It really isn't. And once you've spent an hour or two learning about pivots, etc., you'll it'll just totally change your trading. Okay, so here we're down here. I've gone long. Now this may be one of the losses I've got. Now this is called a pivot bounce, and it was a divergence trade. If you've got a divergence setup and it's a pivot bounce, that dramatically improves the probability of your trading. So just there, that is a pivot bounce just there, but I think that was the one I had a loss on. Yes, there it is there, and I took another one just here. So once again, for members watching, this is a 2D pivot bounce. Now here's the challenge. I've already gone the break even, and you'll see in a moment I'll get stopped out, only picking up a couple of ticks. So when I say stopped out, that's I've gone the break even, locked a couple of ticks in. Maybe this one will deliver full 10 ticks. So normally in a fast market, I'm after 10 ticks per trade, which is $125 per contract. Or if the market's really slow, I'm only after 8 ticks per trade, which is $100. So here, so I'm out of that basically 28.50, 28. So I only picked up 2 ticks out of that, which is $25 or $250 less commissions in that case. So I'll move these along because up here now, this is a bit of luck. Okay, this one here, I call this a T10, and I bought into a downtrending EMA. Be very careful if ever you buy into a downtrending EMA or sell into an up your trending CMA, EMA, you're really likely to bounce. It started to level out. Now I left my 10 tick stop loss in place, and that's all that saved me there. Normally look, I might have tightened it up, but here it did keep me. Well, here it is. Here we're still in the trade. Actually, you can see where my stop is here, but that's where a safer entry would have been just there. Okay, so just wanted to point that out. We'll just move this along. I call this a bet the farm trade. There's a setup that we see every day in every market, and I call them bet the farms because they kick butt, and it's a trend following strategy with a deeper pullback, and they just work an absolute treat. Once again, a set pattern that we see every day. So what I'm looking for here, so obviously I'm skipping ahead so we can not going to be here for 40 minutes watching just this. I'm looking what's below me or what's above me. I want to know where the pivots are because they're price magnets. We usually go from one pivot to another. Now in a range bound market, we're not going to do that naturally, okay, but you'll quite often then bounce between pivots. Here we're heading down, so let me just move this along. Now just here, now here is another counter trend trade. Excuse me. Now with this counter trend trade just here, note where my target is. Now we'll see in a moment where I get out. This is an hour ago. I've got no idea what happened an hour ago. I've already gone to break even, and that's the other point. If I'm after 10 ticks, I normally go to break even at +7. That's my entry price plus 1 tick to cover the commissions. You'll sometimes see me, I go to break even automatically on the ATM, puts me automatically at break even. Sometimes I'll put my stop back down or lower, pull my stop back down if I think I'm going to have a bit of a wriggle. Now I'm going to break even early here. Why? We bounce here all the time. We'll see what happens in a moment. Now here, all right, I'm out of this trade, and with that one out at exactly break even. Okay, so not even covering commissions there. In fact, might have even had a tiny loss. So just moving this along. Now see what I've done just here. I've put a sell stop order in. No, I've cancelled that. What I was looking at didn't qualify, that's why, and I'm hard up against a pivot. I know exactly where to put my target in or my entry based upon something that's happening on the anchor chart 1. Look, I'm going to skip ahead here because I want to show you the anchor chart here. Now up here, this is called a 3B for members watching. A nice little trade here, and here is another 3B. These are very deep, but notice here that we're still in a downtrend. So these are deeper retracements, and in a moment I think once again, I can't remember what happens here. Eventually here we finally break through, and then finally I get down and hit my target. And just pointing out, now these were good for scalps. Okay, now they would have all been well, not all, but nearly break-even trades, and this is at the end but of the recording. But let me now just show you the anchor chart. Now the anchor chart is our higher time frame. So what we want to see, traders, is see these retracements just there, and this one here, this one here. Look at your higher time frame. You can see here we've got retracements. I've got trade entries there, here, and here. I've actually got multiple entry signals. There's actually four different things we could use to enter these trades. But I want you to notice the black line, the trigger line. We don't want to go against the trigger line. Okay, I want to wait for the arrows. Now what that means is you're going to be in not on that candle but on the next candle. Okay, and you get to know exactly when they're going to plot anyway, so you can predetermine that. And you can see here, and if we jump ahead right now, okay, you can see here we're in a bit of chop right now. These are all entries, by the way, so we wouldn't have been in this trade till here, and in this one till here, and this one would have been a loss for me. Would have made money out of that, but then I've got a T10 right there, and away I go again. Look, traders, day trading or scalping doesn't have to be rocket science, because it's not. What it is, it's a matter of following, learning the patterns. You only need to initially learn a couple of patterns. We see them every day in the market multiple times. You just need to learn how to trade with the trend initially. And like, let me just go back to that for a moment. Okay, so right now we're in a challenging area. Why? We're starting to roll over. Now on top of that, in 28 minutes, actually 32 minutes, we've got the London Open. By the way, this is called a 3B. We'll see what happens with this. Yep, so that's a 3B. I want you to also notice here we've got lower lows, which means this can be a risk area. See the gold line there? We call it follow the gold. And so when you're making lower lows and lower highs, good indication we're rolling over. Ideally, these are patterns you want to be trading these. Now for $325 a day, all you need after any losses is 26 of these. What I mean by these are called steps. Each one of these little steps on the Renko is one tick or $12.50. You need 26 of those, and that is where then, traders, let me just go back and show you this. That is where 26 of those a day, and look where you are in 11 weeks. Okay, that is the reality of scalping and day trading. Now to make it easier, trade with the trend. As you gain experience, you then will add like some of the other trades, like the 2Ds. We've got another trade called the T3, by the way. The T3 is a reversion to the mean trade. It's like a big elastic band being stretched back. Good 80 to 90% winner, but it's still counter trend trade. So I say to all new traders, don't take those yet. Let me teach you how to trade with the trend and counter trend trade. You may choose to add those in the future. Okay, traders, so for $297 you get literally hundreds of hours of training in the members area, over 35 PowerPoints. All of my indicators are free, plus I'll give you 8 live sessions, 2 hours each. If you can't attend those, and by the way, they're 6 to 8 p.m. Eastern Standard Time every Tuesday and Wednesday evening. So traders, come and join me as a member. Make sure you also subscribe to my channel. Hope you enjoyed this, and I know I was quick, but there was so much I really wanted to share in this video. And once again, trading with a trend. Thank you, traders. See you.